Well, good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday, and we're at the 17th of November, 2025, and about 6:15 p.m. Central Time. Big down day on a Monday often leads to an attempt at a bounce on a Tuesday in stock indices. Is it all the time? Well, I wish I could tell you that it's all the time, but it isn't. Death taxes seem to be what's all the time, and illnesses at other points, but that's about it. We're seeing that there's a pretty good correction going on in the gold market, the silver market at this point as well. You're not getting really too much movement whatsoever in the foreign currency markets. The energy markets, I'm not surprised that you had a good-sized break in the natural gas or the heating oil. I made mention of it to my subscribers. As much as I couldn't do these videos because of the surgeries that I had, and I had 3 of them actually in a 2-week period, I feel so much better and I'm acting good. Yeah, being up here and standing like this after a while, my back hurts a bit, but that's normal and it's part of what the therapy's going to be anyways. But would I do it again? Absolutely. I feel like a different human being. So I can just tell you that it was worth it in my particular case. Now, we're going to get news tomorrow. And the news you're going to get is your Redbook retail sales. That comes out at 7:55 in the morning. You're not going to get the Federal Reserve industrial production capacity number. They've got to get the BLS and everybody else giving us the data that they can put together. Factory data order for August. This is already going into mid-November now, right? Late November. We're past mid-month, really. And you're towards December, they're giving us the August number. They claim it's going to be up, or they predict it's going to be up. That's a better number. A forecast, 1.4% versus the July being down 1.3%. And we'll get the API numbers late in the afternoon, about 3:30, to see just how they're looking as to, are we building oil stocks? What are we doing with gasoline, heating oil, so on and so forth. All right. So in looking at the markets, you're in a corrective time. You're getting a certain amount of profit taking. You're getting that. Remember I told you when I was feeling better, but it was only in the past 2 weeks within that the cycles had shifted to the right and there were corrections taking place. And the breaks that I thought were going to take place from the August, September into October had shifted right. I believe that that's the case. Do I believe that we're going into a major bear market into the end of the year? I do not. Do I think we're in a corrective mode? Absolutely. Do I know how deep it can go? I do not. I'm nervous about what Nvidia says on Wednesday. We need them to stay strong, real strong, because if they do, they hold up that whole segment, which in turn helps the other segments of the whole game. So that's what you watch. That's what I'd be watching. As we're looking at the S&P, you're down for the week. Remember, we're only we're just after 6 o'clock, so you got 1 day and an hour and something under trading. You're down nearly a 1% so far. When we take a look, you can see how the market's done a small rollover. The swing line has got lower highs, lower lows. It's in a bear camp. The market played a battle, as I teach you here often, at the 18-day average of closes, and then it decided to let go. And in the letting go, it's already at support. It's one of the reasons I'm not getting super bearish. You're at the Bollinger Band already. You only stay under it 5% of the time. Number 2, the next big support in the market is the green line, the 100-day average of closes. Between that and that, you generally get a good support area. If that didn't hold, you could go back to 62.53. That's 400 points lower. That'll get everybody's attention. I don't see a reason to do that given how oversold the market is right now. So that's the camp I'm in. Am I bullish? Absolutely not. Am I trying to pick a bottom in the market? As a chartist, I am not. Am I telling my clients to go long? I am not. This would be a good area to cover shorts, if anything. And I feel the same way in the NASDAQ. Oversold, down to the Bollinger Band, the 100-day average. Okay. You have to get over these numbers that you made last week, where those arrows are, the ones that are pointing down, in order at this point in time to negate the downtrend. Chart patterns change every couple of days, but that's where those numbers are right now. It's different in the Dow. This was your leader on the way up, as you know, just over the past 10 business days. You got up to the Bollinger Band, you peaked out at it, and magically, it didn't even stop at the 18-day average. It did one day. Let me just show you something, because it's always so important. I tell you, markets often return and try to fight a battle at that 18-day average. It did, and then if it's going to let go, the Bollinger Band's your next likely target. And if that lets go from here, then maybe you get to the 100-day average. You're already oversold as can be. You have a higher high and lower low. Well, let somebody else have that. When we come to the Russell, I have been adamant that this is the market that's the weakest of the indices. Now, back in June, I changed gears and I said, I think he'll go up and it'll try to catch up with the other indices. I have not said it's going to be the leader to the upside. No way. And if interest rates don't break, it weighs on this market more than the others. And that is because so many of the companies that make up the Russell, unfortunately, don't make money, and interest rates, high interest rates, or relatively high ones that aren't breaking, weigh on their bottom line. When we look at the DAX, didn't quite make it to the upper Bollinger Band. You fought the battle where I thought. You bounced off the Bollinger Band, and I thought the first problems would be, and said it here, the 100-day average in the 18. It was. I thought you might make it a bit higher. You didn't. And I'm in the middle of no man's land. You've got a higher high and low, momentum down, bias down, but where am I going with that? I am not in the bull camp on any of the interest rates. And the reason is I don't see why the Fed should even cut rates until we have some data that makes some sense. This is November 17th. I admit we'll get a lot more data between now and December 10th, the next meeting. But to have me commit at this point on November 17th that I think the Fed should cut interest rates, I am not in that camp. I am in the camp that wants to see data. I want to see, did CPI, did PPI, what did they do? What did real jobless numbers do? What did employment report do? I want to get some numbers, all right? That will help me make a lot better decisions. You've already had 2 of the cuts. The Fed is conservative. Do they really have to go to the third? If they do, what are they nurturing that you and I don't know about? That's what bothers me. The argument you're getting is they want to get ahead of the curve. They did by giving you the 2 cuts with no data. That's my perspective. You got the higher highs, the lower lows in the 2-year notes. You're oversold as can be. You could embed, and that could be bearish for that market. In the dollar, the battle is and has been the combination of the 200-day average in gray and the first challenge of the Bollinger Band. And I said, you're in the zone where the market should have problems. And boy, did that turn out to be correct. You, at the same time, fell down into the Bollinger Band, lost the bearish reading, and turned back, and you're still fighting a battle at the 18-day average of closes. I mean, the reality is you have to take out this low to get bearish or knock out the bulls in the euro. And in the dollar, to knock out I won't call it the bears, but to knock out the bearish momentum, you've got to get back up and over here, as I see it, the 99.61.5 zone in the market. Okay? Let's come over now to the yen. In the yen, you're down to the Bollinger Band. Now, this is a market that what the Japanese government is doing seems to me a little nutty right now. I'm watching them have arguments with China that they don't need to take on. Second thing, are they really talking interest rate cuts again? I mean, look at their percentage of GDP, their debt loads, expenses, where they're at, and they're going to do that, then the yen's going down. Then they are got to be of the opinion, from my perspective, that the lower yen is their savior and they're going to bust the yen. So even though you're at the Bollinger Band on hard rallies with an embedded reading, I don't see anything but short covering coming in the market. When we look at Bitcoin, so you just came from nearly $129,000, and right now you just hit 91,775. Now I'm watching Tom Lee from Fundstrat and others all talking, and they're picking this week as the low. Tom did at least, as the correction. He's a pretty good timer, so maybe he'll be right. I don't know, but I'm not seeing anything there that tells Ira to go ahead and pick a low. I'm seeing it just, and that's not an instrument to pick a low. to pick a low. In looking at how the market is dropping down right there, bingo, you're in betting. Until that's lost, rallies in the market, in my opinion, will continue to be sold. And I think there are people caught right now, and they're hurt. You've given up all the gains of the year in short order. When we come to the energy market, you got to start coming out of your Dece contracts now. So I'm watching February Brent crude. I don't like what I'm really seeing. I see higher highs, lower lows. I'm not in love with the pattern that I'm seeing there. WTI narrowing in on the Bollinger Bands, but most of the trade just being done against the 18-day average. Very difficult market to make a call on as I see it right here. Heating oil, you had your first cold weather. We had those blasts, we had some snow, the market went up, made its run for the bands, and now the question is, can it build on that, or is that it? And to hit the first time of a 200-day average and an upper Bollinger Band together, saw what I said in gold markets and others earlier. I said, no, folks, in the dollar especially, that was the recent one here. That is the zone that money starts coming off the table. And that's just what I think. Now, could there be really good support here? Sure, but not when you're this overbought. So that's just my take on it. Being a chartist, I walk away from things like that. What I walk into is trying to figure out what to do next. And with your help, we do that. You can take a look at my videos in the morning. These are my paid subscriber videos. If you haven't had a trial, if you have, you won't get another one. All right, you want to take advantage of the Black Friday sale that's coming up, and there is one coming up. Subscribe, okay? This will be one of your best sales of the year. It's something to take a look at. But that's how you get my information and others. And all you need is one good trade idea. Traders are going to be wrong. If you're looking for somebody that walks on water and they're going to catch every trade for you, number one, look elsewhere, because I'm not that guy. Number two, that person doesn't exist other than in fiction books, all right? Not the reality of the situation. Traders get right, traders get wrong. The name of the game is preserve the capital, try to let the winners overcome the losers and ride them as far as you can. I'll try to help you with that. That's all I can try. IraEpstein.com free offers. There's an icon up here. If you move your cursor there, you'll see it. Same thing here. If you're watching me on YouTube, give that a click. I'm Ira. Watch the other videos tonight. I'll catch up with you all in the morning. Have a great evening.